Diamond hands versus paper hands. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee. Let's take a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 37,930. Bitcoin is down about 11% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Looking at our top stories, Bitcoin plummeting for a fifth day straight, dipping below $32,000 Wednesday morning, putting the largest cryptocurrency on track for its worst month in more than 3 years and leading a full-blown retreat from the crypto markets. The latest crash shook out bullish leverage from cryptocurrency derivatives markets, leading to more than $8 billion in position liquidations due to margin calls. The correction could soon run out of steam, however, according to CoinDesk's Onkar Godbole, as technical indicators show oversold conditions. Meanwhile, corporate stocks tied closely to the fate of Bitcoin are following the lead cryptocurrency into a sea of red Wednesday. MicroStrategy, the business intelligence firm with billions in Bitcoin reserves, is down about 9% today. Square, the owner of Cash App and another holder of Bitcoin reserves, is down 2%. And Coinbase, the leading crypto exchange in the United States, is down almost 7% and flirting with all-time lows at $223. Finally, amid the market crash, crypto exchanges are struggling under heavy traffic. Coinbase, Gemini, and Kraken are all reporting technical issues, which include intermittent downtime across web and mobile. And joining us now to discuss is Matt Weller, Global Head of Market Research at Forex.com. Welcome to the show, Matt.
Hey, thanks for having me.
Great to have you. All right. Matt, it's a bloodbath out there. What strikes me is how quickly the narrative has changed. You know, Bitcoin is falling and people are blaming Elon Musk, China, paper hands. In response, Elon Musk tweeted that Tesla has diamond hands. China isn't saying anything new. They say there is a ban on cryptocurrencies, but the market there is alive and well. They just seem to be reiterating warnings against trading cryptocurrencies because of the volatility. That is just a lot of noise to me, though. So what do you think, macroeconomically speaking, is behind this fall?
Sure. So we often see this type of scenario with major crypto assets, especially Bitcoin, which has the longest history in this space. And that's that sometimes the market just gets too euphoric and we have to flush the system of all that leverage. Perhaps the catalyst was that China regulatory news or reiteration that you had mentioned. Perhaps it was something related to the recent environmental concerns. And perhaps it was just some profit taking led to more profit taking, led to a break of a technical level. And at that point, other traders were forced to sell. And I wanted to share this chart with the viewers that essentially highlights that this is a regular part of Bitcoin cycles. Looking back to the last bull market cycle we saw through the latter half of 2015 until the end of 2017, we saw 7 separate 30% declines on an intraday basis in Bitcoin. And so far on this cycle, we have only seen 3 of those, counting the one we're currently in. So I think if it's your first time around the block, it's certainly been a very confusing, alarming, perhaps even traumatic day. But for those who have been hodling for a long period of time, they recognize that these very sharp short-term drops are a common feature of Bitcoin, even in the midst of bull markets. And that's why that hodl meme has sunk in so deeply.
Mm-hmm. So is it a good buying opportunity?
It could well be, honestly. It will. I have other charts to share that suggest perhaps we're not quite at the top when it comes to this long-term Bitcoin cycle. This one will take a second to walk through, but I think it's very instructive. Essentially, what we've plotted here in yellow is the Bitcoin price, but below that, we have the MVRV Z-score, which is a mouthful that basically measures the difference between the current market cap of Bitcoin, so the average price times the number of coins in circulation, compared to the realized, or that value, or essentially when those coins last changed hands, and then we normalize it using a z-score. Now, you can do more research on your own if you find this interesting, but what I find most fascinating about this chart and this indicator is that on previous bull market peaks for Bitcoin, we've almost always peaked at exactly 11 on this measure. And so far, last month, or even I think it was back in February, as a matter of fact, that's where we saw the peak in this ratio so far, and it was only at 8. So that's not to say that perhaps we haven't seen the top for this cycle for Bitcoin, but if we have, that would be different from all the previous cycles we've seen as this asset class has matured. And for that reason, I think as we look ahead, that there could still be some more upside for Bitcoin.
Still room to grow, always a silver lining. Okay, Bitcoin seems to be dragging the crypto markets down with it as a whole, it seems, though. The alts had higher highs and BTC in terms of year-to-date returns. Are alts dropping harder than Bitcoin as a consequence?
Yes. Looks like it. Just checking my price charts here. So yeah, I wanted to quickly touch on Ethereum. I realize this show's about Bitcoin, but Ethereum's been where a lot of the excitement has been. And I think that it's intricately related to Bitcoin. If Bitcoin's struggling, we're going to see Ethereum. We're going to see the DeFi ecosystem struggling. And that's exactly what we're seeing so far. As this chart shows, the total value locked in DeFi applications, this is essentially people who are using some of these decentralized protocols to borrow or lend or provide liquidity in exchanges, has fallen. And just to update the numbers, it's down 25% now over the last couple of weeks. But on balance, that's honestly, I think, a best case scenario. I think that's a lot better than if you just look at a high level, the collateral for DeFi is Ethereum and maybe Bitcoin to an extent. So people are putting up Ethereum and Bitcoin, borrowing stable coins, other assets against that, and going out and using those to try to generate even more yield. So when the value of your collateral drops 40% over the course of a day, like we saw with Ethereum, you would expect just a massive wipeout in all that leverage. And honestly, if this is as bad as it gets, which it may or may not be, but I certainly think that we're seeing the system hold up. All the functionality is still working better than perhaps you might have thought if I had told you last week that we would see a 40% drop in a day in Ethereum.
Mm-hmm. So what do you forecast will happen with alts in the days ahead?
I think we have to take some time to digest this move. If we flash back to the first chart, you'll notice that, yes, we see these very sharp sell-offs, but oftentimes Bitcoin and Ethereum have to consolidate for a while before going on to make new highs. And I think that's what we're likely to see over the weeks to come. Traders are going to pick up the pieces. We've sort of cleared the table of all the excess leverage and excessive speculation that we had seen in recent weeks. And I think once the market digests that, the longer-term bull market will resume once again.
And from your notes, I'm just thinking that with the gas fees in terms of ETH is also making things slower in terms of people offloading their holdings.
Yes. So, of course, gas prices are the cost of doing business in Ethereum, if you will. And you can see that has really spiked higher than it's ever been in history. I think we were at 1,300 GWE at one point this morning to conduct a transaction. That means hundreds of dollars in some cases to borrow or lend money. And this is something that it makes sense because the big players in DeFi are arbitraging some of the differences in prices, and they're willing to pay this very high price to across large sums of capital to try to make a profit. But for a lot of the smaller or medium-sized players in the DeFi space, I do think that higher gas prices has sort of kept people from unwinding those overly speculative positions. And if those gas prices continue to moderate, maybe we continue to unwind some of that leverage in the weeks to come. But again, I think the system is held up much better than, as you mentioned, Coinbase or Binance or some of those centralized finance exchanges. And I think overall, the way so far that we've handled this sell-off is an encouraging sign for Bitcoin and Ethereum moving forward.
Matt, just tying up everything together, does Bitcoin still have room to fall further, or is it oversold? What's the floor here?
So you can never tell exactly where the bottom is. I think if we were to benchmark it to some of those previous thresholds, Bitcoin generally hasn't fallen more than 50% while it's in the midst of a bull cycle. So I think if we do break today's low, that might be cause to reevaluate the longer term picture. But as it stands, we've already recovered at about $10,000 off of the Bitcoin panic low. So I think that was certainly a capitulation tradable bottom. And as long as that holds, I think the bias is still to the top side for Bitcoin over a longer term basis.
All right, Matt, thanks for your analysis. Appreciate your time.
Pleasure to be here. Thank you.
That was Forex.com Global Head of Market Research, Matt Whaler. And coming up, more BTC analysis and crazy trading volumes with CoinDesk's Director of Data and Indexes, Galen Moore.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Well, it's no wonder crypto exchanges are buckling under the pressure. Wednesday's trading volumes are massive. This chart from the CoinDesk research team showing year-to-date Bitcoin trading volumes. The last 2 days have recorded the second and third greatest trading volumes of the year. The number of Bitcoin flooding onto exchanges has risen by more than 65,000 BTC in the past 7 days, according to Glassnode data, a bearish signal that investors are looking to liquidate their holdings. Several analysts suggesting the market is hitting capitulation, which refers to the point in a market downturn when investors give up on recapturing lost gains and sell rather than hold a given asset. More than 460 billion has been wiped away from the crypto market's total market capitalization over the past 24 hours. Even so, Elon Musk saying that Tesla has diamond hands, MicroStrategy CEO Michael Saylor tweeting, "I'm not selling," and several trading firms are telling CoinDesk they're buying the dip. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome to the show, Galen.
Thanks, Christine. Glad to be here.
Glad to have you, and thank you for this chart. How are you interpreting today's deluge of trading volume?
You know, I think one of the things that's happened in the past, say, 2 years is that crypto infrastructure has matured. Capital flows much more easily into markets now than it did in, say, 2017 or 2018. And so you see that in events like these, volume surges as participants look to sell or buy the dip. You know, in the sort of early days of crypto and Bitcoin's run-up, that wasn't necessarily the case.
All right. You know, traditional equity markets have a saying, sell in May, go away. Does that seasonality apply to the crypto markets?
I wish it did, Christine. Traditional equity markets also have a market close at 4 p.m. every day. And most of the real bloodletting was occurring here in the wee hours of the morning or late night. So, you know, it's... I don't think that you can attribute this to a sell in May and go away type of sentiment. Certainly hard to point to much else other than the kind of continued negative sentiment after the sell-off over the weekend, which seemed to have been precipitated by the Elon Musk FUD on Twitter.
Yeah. Do we have a sense of how much of this sell-off is retail versus institutional?
You know, it's hard to parse in the short term like this. You know, certainly plenty of sort of positive indicators over the long term of growing, quote unquote, institutional interest in crypto, in the crypto category. But one indicator is volume on LMAX Digital, which is a 100%, basically 100% institutional spot market. And you know, we're seeing volume increases there just as much as on other Bitcoin price index constituent exchanges that are more retail focused as well.
Mm-hmm. And do you think that this could scare off institutions from investing in crypto? It reminds me of the last bull market when Goldman Sachs talked about opening up a trading desk, then closed it upon the bear market. Will we see a cooling effect, do you think?
I somehow doubt that, Christine. I think, the prior guest that you had on had some good points looking back to 2017. Price dips like these are not uncommon on the way up to new highs in Bitcoin, at least in terms of the historical pattern. The XBX low just above 30,000 was 54% off its all-time high. That's a staggering number. 41% off its price before Elon started tweeting. But the largest dips of the year until now were rather large numbers as well. 27% beginning April 13, and a 23% drop that began on January 9. It's I think it's kind of par for the course in crypto, and certainly I think the pace at which most institutional investors are taking interest in this space and are likely to move in, I think by the time we may be in a different regime, by the time, that starts to have that kind of long-term effect.
Okay. All right, Galen, thanks for your insights this afternoon. Appreciate your time.
Thanks very much, Christine. Always good to be here.
All right, that was CoinDesk Director of Data and Indexes, Galen Moore. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.